All right, today we're going to dive into a pretty fascinating story unfolding in the crypto space. We're talking about a small $60 million project called Epic Chain and how it's trying to ride one of the biggest, fastest moving waves in the entire market. So let's see what the analysts are saying. But first, to really get a handle on Epic's potential, we have to zoom out. See, this project isn't happening in a vacuum. It's trying to catch a massive financial wave that the big institutions are calling the RWA revolution. Now, real-world assets, or RWAs, might sound super technical, but the idea is actually pretty simple. It's all about taking real, tangible stuff, a building, a masterpiece painting, even a stock, and creating a digital token for it on a blockchain. It's basically the bridge connecting the old-school financial system to the brand-new world of digital assets. And let me tell you, this isn't some niche corner of crypto anymore. The giants are here. When a company like BlackRock is pouring nearly $3 billion into tokenized US treasuries, well, that tells you a massive shift is happening. This is the big money, the institutional players validating the entire concept. And that growth is just picking up steam. Analysts are actually projecting that the value of all tokenized RWAs is going to rocket to nearly $18 billion by early 2025. This trend isn't just growing, it's accelerating, and fast. So, with that huge, multi-billion-dollar backdrop, let's zoom right back in on the little guy we're here to talk about, Epic Chain. So what is Epic Chain? Well, it's an Ethereum Layer 2, which is just a fancy way of saying it's a blockchain built on top of Ethereum to make things way faster and cheaper. It also recently rebranded. It used to be called Eternity Chain. Now its focus is on a really cool slice of that RWA pie, entertainment and gaming. Think about it. Tokenizing a piece of the royalties from a hit song, or owning a one-of-a-kind sword from a video game that you can actually trade in the real world. That's the future they're trying to build. But the detail that really makes everyone's ears perk up? Ripple Labs, the company behind XRP, was one of their early investors. Okay, so how does all that come together to build an actual investment case? Let's break down the core arguments that have analysts giving this project a second look. And it really all comes down to this one question. You hear analysts in the source material tossing around this idea of a potential 10x return. So you gotta ask, where on earth does a number like that even come from? The first piece of the puzzle is its size. Right now, Epic Chain has a market cap of only around $60 million. In the wild world of crypto, for a project with these kinds of backers and connections, that is incredibly small. And to put that number into perspective, just look at another major RWA player, Ondo Finance. They have a market cap of around $3 billion. The argument here is simple. If Epic manages to capture even a tiny fraction of the attention of the sector leaders, there is a huge, huge gap for it to potentially grow into. Next up is the token supply, and this is a big one. A staggering 94% of all Epic tokens are already out in the market. What that means is the risk of a flood of new tokens hitting the market later and driving down the price is incredibly low. That's a strong fundamental that honestly a lot of people overlook. Now, this part is pretty unusual. Despite being so small, Epic is already available on every single major exchange you can think of. Binance, Coinbase, you name it. That level of accessibility is normally saved for projects that are way, way bigger, and it removes a massive barrier for potential growth. And finally, you've got the social proof. It's not just the early investment from Ripple. The project is followed on social media by some of the biggest names in online culture and marketing today. We're talking Mr. Beast, Gary Vaynerchuk, even Shaq and KSI. That's a pretty strong signal that some very influential people are watching this space very closely. But okay, let's pump the brakes. It's not all upside. Any project this small comes with significant risks, and it is absolutely crucial to understand the other side of this coin. This is the fundamental trade-off, right? The very same low market cap that creates the potential for a 10x return also creates the potential for extreme volatility and risk. It is a high-risk, high-reward scenario, and I really can't overstate that. It is so important to remember what all the sources for this explainer emphasized. This is not a sure thing. Small projects are extremely volatile, and what happened yesterday means absolutely nothing for tomorrow. This is purely for informational purposes, and it's critical to do your own deep research and to avoid confirmation bias. That's the trap of only looking for information that confirms what you already want to believe. Okay, with those risks firmly in mind, let's circle back to the speculative analysis and break down exactly how those 10x projections are even calculated. The math is actually surprisingly straightforward. You start with a $60 million market cap. A 10x from there puts Epic at $600 million. Now, when you hear that the average market cap for a project listed on a top exchange like Binance is around $750 million, well, suddenly that $600 million target doesn't seem so impossible, does it? It would simply make it an average project. This chart really puts it all into perspective. That little bar on the left is where Epic is now. Reaching the second bar, that 10x target, wouldn't even make it a standout on a major exchange. It would just make it average. And that right there is the core of the growth argument. So, the crucial point is, after looking at the whole picture, the trend, the project, the risks, and the potential, what are the key things you should really take away from all this? Okay, let's break it down. First, the RWA trend is real, and it has billions in institutional money behind it. Second, Epic Chain is a tiny player in that massive sector, but it has some powerful friends and incredible exchange access. Third, this whole situation creates a classic high-risk, high-reward scenario. And finally, that 10x projection isn't some random guess. It's based on a pretty straightforward comparison to market averages. Which, of course, leaves us with the final question. Is this a case of finding a hidden giant right as a massive trend is about to take off? Or is it a highly speculative bet that's just being driven by hype and could just as easily go the other way? The answer, as always, lies in doing your own research.